Doing
Good.
24 unit in building or something like 30 flats, 40 flats.
That is best. That is best. Yeah, just stop it there. Go to that YouTube link. Yeah, stop it. Yeah, stop it. उसका वॉल्यूम ज्यादा करो.
उसका वॉल्यूम फुल है.
हाँ नहीं नहीं, हाँ अभी फुल है. Okay, stop it. Okay, that's it. So and go to another tab in browser. इसमें type time.is. Yeah, Shravanti, luckily it's working here also. I got one idea, Shravanti. Most probably, if people are using two applications, okay, or two machines, okay, if at all it is running on the screen that is not shared, probably that could be one reason. Shravanti, you got it? Okay. So Kapil bhai, you just leave it there because
Okay.
people will know that screen is jumping. All right. Okay.
Okay.
Okay. So that is the whole point. 1 second. No worries, Shravanti. I could hear. Okay. All is well. So Kapil bhai, everything is good. All right.
Okay.
So the process is very simple. I will give you an introduction. Okay.
Okay.
And then I will start recording, give you an introduction, and then you will hand over the stage to you. You will drive the session. You will continue to do it. And before the Q&A, we will stop it. We'll take 5 minutes for our title sponsor Espresso to talk.
Okay. No issue.
I will request you to run Hi, hello, good evening, friends. Welcome, one and all, to Nifty Banker 2.0, India's first retail index traders online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul, and also the host for today's program. It's a great pleasure to invite every one of you into this program today. I hope everyone are aware that we have successfully completed 50% of the classes so far. We still have 6 more sessions to go, and today being the 7th session. I am sure by the end of this program, you will definitely have a lot of knowledge with respect to some special topics on reverse buying. I would like to thank our media partner Moneyconytrol Pro, the largest financial portal in India with millions of daily readership on their website. They helped us to reach a wider audience in a very short period of time. I would also like to appreciate our title sponsor Espresso, the Sher Khan company, one of the leading discount brokers in India. The speaker for today is Mr. Kapil Dhama from Delhi. He is a full-time options trader and he has two businesses interests in both edtech and real estate. He started his stock market journey almost 5 years ago. Before that, he was working in Government of India as an engineer in the Central Labor Ministry. Kapil Dhama is speaking in a Traders Gurukul conference for the first time. My friend, it's a great pleasure to have you on board as a speaker. On behalf
Thank you, sir.
of
Thank you very much.
all the participants of Traders Gurukul, Moneyconytrol Pro, Espresso, I extend my warm welcome into this program as an elite speaker. Go ahead, Kapil. The stage is yours.
Thank you, sir. Thank you, Ashokji, to invite me on this platform. So, so today we will talk about iron fly in our adjustment setup, which is called reverse buying. Okay. So basically, many people are doing non-directional selling in our index, and many of them are doing iron fly. Many are doing iron condor, but in recent time, people are shifted to iron fly because if you are an option seller, then you need maximum premium. If you have to sell something, then you should go for maximum premium. And if you have to go for maximum premium, then you have to go on ATM at the money. So that's why in last couple of years, many people shifted from iron condor to iron fly. And there's one drawback for iron condor because it's heavy movement in indexes like you saw yesterday, 1200 point fall in bank nifty and today 1500 point rise in bank nifty. So this kind of volatility iron condor can't handle. So that's why many trader moves to iron fly. So what is iron fly? In iron fly we sold ATM straddle, okay, and we buy some hedges on both side. Something like if we got 1000 rupees premium in straddle, then we can buy 1000 point far away hedges on both side, C as well as P. Okay, so there are many myths in this market. One myth is that option selling is safest kind of trading and there is a very less risk. So many people think that we can earn something like 2%, 3% or 4% regularly with selling. It is possible, but if you have some conviction and if you have some setup, okay. If you have, if you don't have any kind of setup and you are continuously selling strangles and you are continuously doing iron condors, then it will become very difficult to earn something like 3% or 4% per month, because there's a proverb that in option selling you eat like a bird and shit like an elephant. It happened because you earn like 0.5%, 1%, 0.5%, 1% per week, slowly, and someday you lose 10% of your capital. So that's why we move to iron fly, because if we got premium, if we got profit, then we will get maximum profit. We will get 3%, 4%, even 5, 6% in a week. So that's why in today's topic I will guide you about iron fly, and there is a adjustment setup for iron fly. If you make an iron fly and you leave it and market is going up and down, it will give you panic. Okay, it will give you much more panic than iron condor. But if you make some adjustments according to market movement, then you can get good profit and you will not get any kind of panic. So after 1 year research, we developed a system for ironfly. It is called reverse buying setup. Okay. So first I will guide you about option adjustment. What is like I always say, the art of option adjustment. Option adjustment is something like an art. Okay, there is no fixed criteria to do any kind of adjustment in any kind of strategies. You have to behave according to market, because market is very dynamic in nature. So your trading setup cannot be static. Okay, many people told me that please give us some set of rule, that if market is going this way, if market move 300 point, then what we have to do. If market move 200 point, then we should do adjustments. So I told them that there is no fixed rule. It is something like freestyle wrestling. Okay, what happened in freestyle wrestling? You have to win. There's no rule in freestyle wrestling. So the same happen in option adjustments. Okay, so your trading setup cannot be static as a trader, and we are most afraid of losses. So basically, what's the main problem with option sellers or with positional option sellers? Let let take let take an example. So if we make an iron condor, okay, and it's showing that we can get maximum profit of 5,000 rupees, and we can get a maximum loss of 4,000 rupees. Okay, so what will happen in case of loss? You will book full loss of 4,000 rupees, but when you get profit, you will not sit till last. Whenever you get 2,000 or 5,000 rupees out of 5,000 rupees, what will be your calculation? That I got 40% of maximum profit, I should book it. So major problem with option seller, that in case of loss, they book full loss. Okay, even in strategies, if you are going with risk defined strategies, then there will be a maximum profit and there will be maximum loss. So in case of loss, we book maximum loss, but in case of profit, we never book full profit, because if we want to get full profit, we have to sit till expiry. Okay, and if you are making an iron fly, and if iron fly is giving 100 points and still your both side loss is open, then you will get in panic, you will go to, you will become greedy, and you will book that small part. Okay, so the trader most afraid of losses and exiting profitable trade way too early. But the art of option adjustment help us overcome these fears. With adjustments, we can make our trade absolutely free. By the mean of absolutely free, I want to say that there will be no loss in your iron fly. Your iron fly will become absolutely free, and you will get maximum profit or you can get minimum profit, but there will be no loss. In that kind of situation, you can sit till last 3:30 of expiry, and you can get maximum profit. Okay, so if you want to be a successful trader, then you have to take maximum profit of from trades, because in case of loss, we always book maximum losses also. Okay, so learning option adjustment method like reverse buying, which can help in reducing losses or eliminate loss altogether. Okay, with help of reverse buying method, you can minimize your losses, or even you can make your iron fly absolutely free. Okay, so learn the famous iron fly strategy developed by me, Kapil Dhama, and I will answer all questions related to this particular strategy. So this is an example of Mahendra Singh Dhoni. This is something kind you can correlate with your trading style. So my favorite cricketer is MS Dhoni. Why is my favorite? He's best finisher in world. Everyone knows, nothing new in this. But why he's best? This is the question mark. Okay. He's best because he always have a game plan and he always try to take match into last overs. If you saw his style of finishing, he always try to take game into deep into till last over. So something like that. If you are doing option selling, you have to go till last ball, till expiry, till 3:30 on expiry, and you will get maximum reward. Same we did in trading. We always try to keep our strategies till last ball, means till 3 p.m. on expiry day for max profit. If you are doing option selling, you can correlate that. If you sell something on Thursday for next expiry as a positional trade, okay, then you will got only 55% of profit till Wednesday, okay, and major chunk will left on table for Thursday. So if you are doing any kind of strategy like iron condo, iron fly, and anything else in option strategies, you got 55% profit till Wednesday, and remaining 45% of profit you will get on Thursday. But what happened if your loss is open? So many traders will not sit till Thursday. So that's why we developed some beautiful adjustment setups. These adjustment setups give us confidence to sit till expiry, to go for maximum profit without any kind of fear of loss. Okay. And even we can lock our profit also. I will give one example, and I will give you all details. How can we lock our profit also? That we will got at least we will get some minimum profit from any kind of strategy. So today's our topic is reverse buying. Okay, this term is coined by me. And what is reverse buying? I will try to elaborate this. And there's a two part for reverse buying. Okay, so basically reverse buying is an adjustment method which can be used in ironfly and butterfly. We can use it in both kind of strategy. As you know, the risk reward and everything will be same in ironfly and butterfly. Basically, ironfly is the combination of debit spread and credit spread, and butterfly is the combination of two debit spreads. So two credit spreads. Okay, so both strategies are absolutely same, nothing different in butterfly and fly. So in this adjustment method, we always try to minimize our loss by giving debit from pocket. Till now, you saw many videos on YouTube for adjustments, and in each kind of YouTube video, you only get to know that we have to sell some kind of extra options. We have to take some kind of extra credit from extra selling. But in this reverse buying method, we don't have to push any kind of new margin in trade. We don't have to sell any kind of new option. Even we are doing adjustment from debit, not from credit. We are not taking any kind of credit in this strategy. This is completely a opposite approach which you saw on YouTube till now. Okay, on any other platform, everyone will tell you that if you want to save your and fly, you have to sell some naked option on opposite side. Okay, but in this strategy, we are doing adjustments in buying leg. We are not touching our selling legs. We will never touch our sell leg. We will never touch our sell straddle. We always try to adjust our iron fly with the help of buying legs. Okay, so that's why we have to pay some kind of debit from our pocket, or even not from our pocket, from the profit of iron fly. If you made an iron fly on Thursday and on Friday it's giving something like it giving you 50 points, then you can reinvest this 50-point profit to minimize your loss. Okay, so it is something like reinvesting profits for more gain. like you are doing in compounding. What we do in compounding? We always try to invest our profit also. So reverse buying is something like that. We have to invest our profit in to give some kind of debit for adjustments to get maximum profit. Okay. So in reverse buying, we have to give debit from pocket. So we always try to give minimum debit. So if I have to give debit from pocket, if I have to buy some kind of option to hedge my strategy, then I always try to give minimum debit because I have to give this debit from my own pocket. So I always try to give minimum. Okay. If you have to give something to someone, then you always try to give minimum. So in reverse buying, we try to give minimum debit from our pocket. That's why we always adjust opposite wing of fly. There is a new crux for you here. Till now, let you made an fly at 38,000. You sold 38,000 C and 38,000 P for 1,000 rupees premium. Then you buy 39,000 C and 37,000 P. It will become a iron fly. So in our method, in our reverse buying method, if market is going up, we will make adjustment on P side. Okay. Till now, if you are doing any kind of adjustment in iron fly, then you always try to adjust the side where market is going. But in reverse buying, we always try to adjust the opposite leg. If market is going up, then we will try to find opportunity to adjust P leg, P buying leg. But if market is coming down, then we will try to find an opportunity to adjust our C buy leg. Okay. So this strategy is completely opposite which you learned till now. How? Till now you learned that if we want to make some kind of adjustment in and fly, then we have to take some kind of extra credit, we have to sell something extra, we have to sell some other options, like if market is going up, then we have to sell some extra puts, and if market is coming down, then we have to sell some extra calls. But here is opposite. We are not selling anything else. We are not selling any kind of option, extra option. We are not giving any kind of extra margin in this strategy. Margin will be fixed, and we will give debit from pocket. We are not taking any kind of credit, even we are giving debit from pocket. So point number one, which is opposite, which you learned till now. Point number two, which is some kind of opposite in terms which you learned till now in iron fly adjustments. What if market going up? We will not adjust our C. Okay, we will adjust only if market breach our break even. If market is not going to breach our break even, then we will only try to adjust P, opposite, reverse. Okay, so market is very dynamic. So there are two main part in reverse buying. Okay, in this method there are two main parts, because as I told, market is very dynamic. You don't know whether market will be remaining sideways or market give any kind of directional move. We don't know, but we have to be prepared for both kind of scenario. Okay, so as I always told, if we want to be if you always have to be Arjun, not Abhimanyu. Okay, so one kind of adjustment we can do in sideway market, and there is a one kind of adjustment which we can do in a trending market or a directional market. So first I will tell you the details about if market remains sideways. Let you made an iron fly on Thursday evening when market is going to close on expiry day. You made an iron fly around 320 or 315 for next whole week. Okay, then you don't know whether market, how market will behave in next week. So let on Friday market remain sideways. Sideways means market is trending in a range. market is taking some kind of support somewhere and market is taking some kind of resistance somewhere. It means market is trying to travel in a range. So in that scenario, we always try to bring our wings, buy wings closer to straddle point. If we got that kind of opportunity that we can bring our wing closer with minimum debit. Okay. So let me ask you one thing. If you sold some straddle and you bought some wings, why you bought those wings? Those wings are only for protection, for any kind of directional movement. Okay. If I sold 38,000 C and 38,000 P and I'm going to buy 39,000 C, why I'm going to buy 39,000 C? Because if market go up, if market go to 40,000, then my 39,000 C buy C will protect me, will protect my C sell position of 38,000. This is the main concept of wings in iron fly. So if we got chance that we can bring our wings closer with minimum debit, then we will do it. First, you have to draw 2 3 support lines on chart, resistance level on chart, some support or resistance. Okay, let you made an iron fly around 38,000. Okay, then you have to draw some levels on chart, some support levels below 38,000 and some 2 or 3 resistance level above 38,000. Okay, then you have to take judgment of any kind of reversal from any level with, with help of price action. So in this reverse buying strategy, we always look at price action, not on strike movement that bank nifty moves 300 point, then we have to do adjustment. No, here we will use price action. Okay, so if market is taking support, let you made an iron fly at 38,000, you bought 39,000 P and 37,000 P buy wing and 39,000 C buy wing. Let market is coming down from 38,000 and on Friday market went to 37,500, 37,500, 500 point below from your straddle point. And on chart you can see that 37,500 is very good support. Okay, and if it is very good support, there is a probability that market can took support there, not guarantee, it's a probability. Okay, because it's all about probability. Market is the game of probability, not of the certainty. So if price action suggests us that market is trying to take some kind of support around 37,500 and our straddle is situated at 38,000 and our C buy wing is at 39,000, then at that time if market is trading at 37,500 and your buy wing is at 39,000 C, it means it is 1,500 point far from the spot, and in that case your C buy position will will be trading around something 50 rupees or 60 rupees, something like that. Okay, even on Friday 1,500 point far option trade around 50 60 rupees. So if your C buy become 50 rupees, then you can shift that buy leg to downward, because in that case even 500 point down C, for even 500 point down C you have to give only 40 to 50 point debit from pocket. If market is trading around 37,500 and your 39,000 C is trading around 50 rupees, then 38,500 C would trade around 100 or 110 rupees. So what you have to do? You have to cut your 39,000 C and you have to buy 38,500 C. What you did here? You just bring your buy leg closer to your straddle point. This is called reverse buying. Buying on reversal. You have to shift buy leg on reversal. If you feel there is some kind of support and market can reverse from here, then you have to adjust C. And if you are watching that market is taking some kind of resistance from some resistance level, then you have to adjust your P buy leg. I will give one example also for this whole process. Okay, always try to follow 20% rule. So basically we made some kind of rules, not setup, some kind of rules कि इतना premium होगा then we will go for reverse buying. If we are getting, if we are not getting below 20%, then we will not do any kind of reverse buying. How? You can give maximum 20 point for every 100 point shift. If you have to bring 39,000, see to 38,900, it means 100 point down. Then the difference between these, the price of between these two strikes, it should not more than 20 rupees. Like if 39,000 see trading around 50 rupees and 38,900 is trading around 75 rupees, then it means the difference between these two strike is 25. 75 minus 50, 25. Then we will not do any kind of reverse buying. For every 100 point safety, we can give only 20 point debit from pocket, not more than 20. No need to give 20, more than 20 points. Because if you give more than 20 points, then you will not get any kind of profit from selling. So we can invest only 20 points from pocket to switch 100 points, and this rule will be same as 20%. If we have to shift 50 point strikes in Nifty, then 20% of 50 will be 10. If premium gap is 10, then we can shift in Nifty. If you have to shift one strike below in Reliance, the point difference between two strikes in Reliance is 20 points. Then 20% of 20 is equal to 4. So rule is 20%, not 20 point. Rule is 20%. And it will be applicable in all kind of assets. Okay, so you have to give 20 points, not more than 20. So now second part, I will give example of that 20, don't worry, and I will give whole example how to make your iron fly free. Okay, first we have to learn rules, then we will go to example. So till now we learned about in if market remains sideways, in case of sideways movement, then what we have to do. But if market start um, if market going in a trend, then what we will do? Okay, so if market become trending, then we have a different kind of setup in that case. Because first of all, if market is going in one direction, then first of all we have to cut our maximum loss. We have to minimize our maximum loss on that particular side. Okay. So in this part we have to identify breakout or any kind of directional movement. As I told, price action is the integral part of this reverse buying. If you don't have any kind of command on price action, then you can make this kind of adjustment if market break your break even. Okay, first of all you have to check price action. If market is going up, if market is in trend, if market is in a strong trend, if market break any kind of resistance, whether market break any kind of support. Okay, and if you are not pro in this, if you can't judge any kind of direction from price action, then don't worry, you can use this method whenever whenever market breach your break even point. Let you sold 38,000 straddle in 1,000 rupees and you bought 150 rupees on both sides. It means 1,000 minus 300 is equal to 700. So above 700 from 38,000 will be your break even, and below 700 will be your break even. Okay. If market touch your break even point, let market is going up and market reached at 38,700, then you have to activate this method. Okay. Leave first method, because first method will be applicable only in case of sideway market. But now if market become directional, then what we will do? If you're certain about direction, then you have to initiate this method. In case of directional panic, you can go with 40% rule. Earlier in this, we learned about 20% rule. What is 20% rule? If you have to switch your buying legs inside, then you should not give more than 20 points or more than 20% of strike gap. If you want to shift 39,000 to 38,500, you have to switch 500 point. So according to 20% rule, you can give 100 points. How? If 39,000 C is trading around 50 rupees and 38,500 C is trading around 150 rupees. It means the difference between the premium of these two strikes is 100 rupees, and the difference between the strikes is 500 points. So if we want to move 500 points inside our C, then we can give maximum 100 rupees according to rule 1. But in case of directional panic, what we will do? We can't sit, we can't wait till 39,000, because if market reach at 39,000, then our iron fly will start giving us loss, and we will be in loss. So that's why we have to shift with 40% rule. And what is 40% rule? Shift by position to break even if it takes 40% premium of strike gap. We have to apply this only in case of panic, and only in case if market break our break even. Okay. How? If your break even is 38,700, let you sold straddle at 38,000, your break even is at 38,700, and your buying leg is currently you have buy leg at 39,000. Then what you have to do when market reach 30 at 38,700? You just have to cut 39,000 C, and you have to buy 38,700 C. Only in case of panic, when 38,700 become ATM, then you have to buy that C, and even you can pay 40% premium in that scenario. How? If we want to switch from 39,000 to 38,700, it means we have to switch 300 points. So in that case, according to 40% rule, we are shifting three strikes. So 40 plus 40 plus 40. It means we can give 120 points debit from our pocket. How? Let 38,700 is trading around 300 rupees, and 39,000 is trading around 180 rupees. Then it means the difference of premium between these two strikes is 120 rupees. So we can shift 300 point inside, and we will give 120 point from debit from our pocket. Why we are doing this? Because if market is going up, then why we have to wait? We can shift our C inside, and if you are giving 120 point debit from pocket, it means you saved 180 points. Okay, your maximum loss reduced by 180 points with this, and you don't have to worry that if market reverse, what I have to do. If market reverse, then you already have straddle at 38,000. If market reverse from 38,700, don't worry, market will go to 38,000 first, and at that point you will be in maximum profit. But in case of directional movement, first we have to minimize loss on in the direction of directional movement. If market is going up, then we have to minimize our maximum loss in that side, because after 39,000 you will be in maximum loss scenario. Okay, shift buy position to break even if it takes 40% premium of strike gap. Then cover your credit spread. This is second option. You can do it or you can avoid. Then cover your credit spread. Credit spread means on opposite side means. What does it means? Basically, what is iron fly? Iron fly is the combination of two credit spreads. What is credit spreads? In credit spread, you sell higher premium and you buy lower premium. This is called credit spread. So what we do in iron fly? If I am selling 38,000 P and I am buying 37,000 P, it become it credit spread on put side. I'm selling higher premium and buying lower premium. Same I am doing on call side. I'm selling 38,000 C and I'm buying 39,000 C. This is also a credit spread. So basically, iron fly is the combination of two credit spreads, nothing else. We are selling two credit spreads. So if market is going up and if market is trading 7 or 800 above point above from your straddle point, that means at that time your P sell will give you mm, maximum profit at that point. It will be in profit. Your whole credit spread of put side will be in profit. That what can you do? You can book that debits credit spread. Okay, and you can sell some option on downside with same margin. Try to understand this. If I sold 38,000 straddle, market is going up, market reached at 38,700. First step, I will cut my 39,000 C and I will bring that C to 38,700. First step. Second step, I will check the difference of premium between 38,000 P and 37,000 P buy. I will calculate the premium. What is the maximum premium left on the table in that cat spread? If I got that my 38,000 P is trading around 200 and my 39,000 37,000 P buy is trading around at 120. What does it mean? It means there's only 80 point left. If my selling is trading around 200 rupees and my buying is trading around 120 rupees, it means there's only 80 point left in that credit spread. So what I will do? I will book that. I will book that credit spread and I will sell 80 rupees PE option with same margin. Because if I booked whole credit spread, margin will release and I can sell PE. So what will happen in that case? You will sell next new PE below even your PE buying position and you will get same credit which you left in credit spread in P credit spread. Why we are doing this? Because if market reversed from 38.7 and we already got maximum profit from that credit spread, then why we have to leave that credit spread open, book it. If market go below 38,000, then your credit spread will also be in profit and you already booked P credit spread. You have to book profit now. You can book iron fly in two parts. Why you have to wait? If one credit spread is giving money, then we should book it. And we just have to calculate premium. How much premium we are going to left, and we can sell same premium below 1,000 point below from our 38,000 spot. Okay, and even if market reverse, then you will be in handsome profit. Okay. So then cover your credit spread of opposite side and sell far strike of same premium which you left on table in credit spread. Okay. Calculate max loss on side of direction. अब आपको क्या करना है? अब ये जजमेंट करना है कि चलो ये तो मैंने बुक कर लिया. I booked a debit credit spread on P side and even I bring my C position buy leg to closer to my straddle point to get maximum protection on upside. Now you have to calculate. Now how much loss on upside. How much there is loss on side of direction. In that case, you can sell some extra option only. You will need to sell for only 50 or 60 rupees. And even you can avoid this 50, 60 rupees. If you shift your buy leg at your break even, your maximum loss on that side will below 100 point. Okay. And you can avoid any kind of selling. But if you want to recover that 100 point also, then you can sell 1500 point down P from your straddle point from 38,000. You can sell 1000 point below. You can sell 37,000 P to get that credit. But I always try to avoid. Okay. So there are three criteria which I use to if I have to sell. So there are three criteria. If your maximum loss on side of direction is below 50 point, then you can sell extra option on opposite side below your straddle point. If maximum loss is around 100 point, then you have to sell extra option near your straddle point. And if maximum loss is 150 point, it will not happen. Okay, in any kind of scenario, your maximum loss will be maximum 100 or 120 points. It will never go above that inside of direction. Okay, you can deploy one broken wing fly at break even, or you can just bring your buying leg 100 point below. I will elaborate this in example. Okay, so this is the total both points in reverse buying. Okay, one is for sideway market with 20% rule, and second is in directional market with 40% rule. You just have to remember these two parameters, and you just have to remember when you have to book one credit spread in Ironfly. Okay, it is very crucial because if we are getting maximum profit from one credit spread, then we should not keep it open because market is very dynamic. Currently, market is going up on Monday, and it could be happen that on Wednesday that market fall 2000 point. Then your that credit spread of diamond put side will give you loss. But right now it is in profit. Book it. Okay. So now we should move to an example, and fly example. So I took a recent week example for this reverse buying. 13 to 20 Jan week. This is the last week expiry. Okay. So on 30th, 13th January, Bank Nifty expired around 38,500. Okay. You can check in this chart. 13 January 2022, around 320. Okay. Market was around 38,500. So we made an iron fly at 38,500. What we will do? We will sell 38,500 straddle on expiry around 320. Okay, because after 3 or 310 market become settled on expiry day. So what we did here? We just made an iron fly. We sold 38,500 P and 38,500 C. Both straddle. We sold straddle. And what is the combined premium we got? It is something around 1000 points. So if we got 1000 rupees as premium, then we can buy our buy wings 1000 point far on both sides, because this 1000 point premium will give you protection in that 1000 point range. So what we did? We bought 39,500 C, exactly 1000 point above of our straddle point, and 37,500 P, exactly 1000 point below our straddle point. Okay. So this is the risk reward at that time on 13 January. So what is the maximum profit? Maximum profit is 17,000 at that time, and maximum loss was 7,600, and it is something around 300 points. 7,600 is something around 300 points. This is the maximum loss we can get in this strategy. So what we will do? We will try to minimize this loss. What will be our first target? Our first target should be that we have to minimize this loss. If we can minimize this loss, then we can sit in trade longer. We can sit till expiry. We can go for maximum. Okay. So this is the trade we took last week on 13 January. Now, condition of this same fly at 20 Jan expiry without any adjustment. Okay. Market close in your range. What is your break even range? 37,800 and 39,200. This was our break even range. Market close between our break even range 37,950. We got some profit of 900 rupees. It is something around 40 points. We got 40 points in a week, and even during the week we got panic many times because market sometime went up, then again sudden fall, then it closed in profit, but it showed huge loss between the week. And in that scenario, you will definitely exit from this trade. So that's why we try to minimize this loss, because if we reduce this maximum loss, then we can avoid that kind of scenario that we are market is giving panic to us. Our strategy is showing 100-point loss or 200-point loss, and we exited in panic, and we just exit and strategy start giving profit. So to avoid that kind of scenario, we try to minimize this loss. How we can minimize this loss? Okay. Now, adjustment one. Like I told you, we have to mark some levels on chart, on spot chart or future. Okay. Some support level and some resistance level. Okay. We made this trade at 13 January. We got chance of reverse buying on 14th January around 11:30 a.m. at this junction. This is a important support level, something around 38,000. See, it is an important support level around 38,000. So when we saw that market is trying to take support, we we can't be 100% sure that market will take support. We can only assume. There's only a probability that market can took some kind of support here. So we made iron fly at 38,500. We have buy wing of 39,500, and right now market is trading around 38,000. It means our buy wing is right now 1,500 point far from spot, and in this case we will get see around in the 39,500 very cheap price. Then we have to catch this opportunity to switch our C buy leg to 2 or 3 or 400 point below. So what I did here, see, we just exit 39,500 C in loss. At that time, it was trading around 50 points, 50 or 60 rupees. We come 500 point inside, exit at 60 rupees, buy at 116 rupees. What is the total debit we gave? We gave from our pocket. If we exit at 60 and we bought at 116, total debit is 66 rupees. Sorry, 56 rupees. We exit at 60 rupees and we buy new wing at 116 rupees. It means we give 56 points from debit from our pocket to move 500 points from 39,500 to 39,000. We move 500 points with the help of 56 rupees debit. We just gave that debit from our pocket and it is fulfilling our criteria of 20%. Right now it is just around 10% only. What I told, we will never give above 20 और below 20 जो मिले it is very good. जितना कम डेबिट आपको अपने पॉकेट से देना पड़े. Okay, because we are trying to give minimum debit from our pocket. So right here I got a chance that I can switch 500 point below my CE buy lag with even only 56 rupees debit, and market is trading around support. So if market goes up from there, what will happen? CE will start rising. CE will become costlier. So I got chance to adjust my CE lag at minimum debit and I will do it. Okay. Now, right now this is the condition. Still our lower break even is not breached at that time. We can wait for second part of the second type of adjustment, which I told you. If market reverse from here, from this support, what will happen? Your strategy is in complete profit on upside. Okay. There is a zero loss on upside right now. With just 50 point debit from our pocket. We just gave 50 point debit from our pocket and our strategy become absolutely free on upside. If market took support and market start rising, then there is no panic for us because we will got profit on upside, more or less. This is a different thing. Now we got chance of reverse buying on 18th Jan around, because after that point market never touched this point till 18th Jan. Okay, market start rising. See, now this is a resistance level. As I told you, you have to mark some 2 or 3 resistance level and 2 or 3 support level. See, there's a perfect shooting star around this resistance zone. So it means market can reverse from here. We don't know. Market even can go up. We don't know. But we are absolutely free on upside. There is no panic for on upside for us. But right here we got chance to adjust our P also, because this is a resistance zone. 38,800 is a resistance, earlier resistance zone, and market is showing some kind of shooting star candles here. Then we can make a judgment that market can reverse. There is a probability, not certainty. There is a probability that market can come down. So what we did here? Simple. We just exit from our 37,500 in loss and we bought 38,200. 700 point inside ले गए हम अपने buy को, because at that time this was trading around 30 rupees and this was trading around 92 rupees. Only 62 point debit. We have to give 62 point debit from our pocket to move 700 point inside. We switch 700 point directly with only 62 point debit, and see, our strategy become absolutely free on downside also. So right now in this strategy there is no loss. Maximum loss becomes zero. There is only profit, minimum or maximum. Whether you will get minimum profit or whether you will get maximum profit, there is no loss right now. This is called reverse buying. Buying on reversal, you have to adjust opposite leg of opposite buy wing on any kind of reversal, because at that particular time opposite side premiums become cheap, and in cheap premium you can switch your buy leg. Okay, if you got to switch 500 point buy like in just 50 rupees, then we have to do it because it give us protection. Now if market fall, what will happen? Earlier I have protection at 37,500, but right now I have protection at 38,200. If market fall below 38,200, no worry, my P sell position will is hedged with help of 38,200, and on lower side I am in profit. So after these two adjustment, whether market go, you don't have to worry. Okay, you don't have to book your position earlier. You don't have to run with some small profit. You can sit till 330. You can go for full bounty of 13,000. It could be. You can get that maximum profit also na. And there is no loss, so you can sit. You can play like Dhoni. You can go till last ball till 330. So final closing of fly on 20 Jan expiry. So on 20th Jan around 330, market closed around 37,950. It is around 550 point below from your straddle point, and you got 6,400 rupees profit on closing. Earlier I showed you that if you don't do any kind of adjustment, then you will get 900 rupees, around 40 points. But right here you got 6,400 rupees. It is something around 260 points, and you did only two adjustments according to levels, nothing else. That's it. And once your trade become free, you become tension free. There will be no tension in your mind that right now strategy is giving 1,000 rupees, I should book because if market fall I will be in loss. Okay, so this is Ironfly, and this is our setup of Ironfly reverse buying setup. We named it reverse buying, and this is pretty unique, and you can avoid losses, and you can sit longer in your trades, and you can go for full profit. How many of you guys go for full profit till expiry? No one. Everyone book on Monday, Tuesday, Wednesday. If your strategy is showing that you are getting 100 points, oh, we should book it. You always book that position. Okay. I have a record of 1,300 points in Ironfly in a week. 1,300 last year around when premiums were so high with this particular method, because there is no panic, there is no fear of losing anything. If there is no fear of losing anything, then you can sit longer. Market closed 600 point below from my straddle, but what happened if market closed around my straddle point? Then I will got this full profit. And what is this full profit? It is above 500 points. 500 points in a week in a bank nifty trade. And even there is no loss. So it gives you confidence. It gives you confidence to sit longer. It gives you confidence to go for maximum profit. Okay. So ये पूरा फ्लाई का कंटेंट था. Is complete from my side, and now you all can ask some questions if you all have.
Okay. Fine. Okay, should we jump into Q&A now?
Yes,
Kapil?
we can go. Yes, we can go.
Okay, sounds good. Before we go into Q&A, Sachin, are you there?
Ravinder is here.
Okay, Ravinder,
Ravinder.
1
Yeah.
second. Before that, Kapil, can you just run that YouTube video?
Yes, yes.
Investment in securities market are subject to
Superb.
market risks. So
Kapil, can you go back to the slides, please?
for investing.
Okay, thank you.
Okay,
Next slide,
thank you.
please.
Next slide, please.
Next slide.
Next slide.
Thank you. Stay there.
Stay there.
Ravinder, over to you.
Ravinder, over to you.
Okay, thank you, Ashok.
Thank you, Ashok.
Hello everyone, my name is Ravinder Hundal from Espresso onboarding team. We are Espresso and we are committed to help traders. Espresso is discount broking company under a Sher Khan group of companies. We have a very unique offer for traders, pay when you profit. So as an intraday trader, you don't have to pay brokerage on loss making trades. For more details, you can check our website myespresso.com. Today I'm going to talk about Bench, which is Windows-based desktop application designed for pro traders. Best-in-class experience, real-time feed, multiple market scan, and many more. For more details, check out our YouTube channel Espresso Invest, where we have demo videos for all features. Option trading is about crunching numbers, but here we try to simplify for traders. We added performance so you can find out on which strike long short build-up happening. Live and easy order placement from bid-ask price. Also, you can drag drop strike to bulk order for strategy orders. We have handpicked tools so it will make easy life for traders. Based on dynamic alert, you can scan all entire option market. When you calculate margin for span, from there you can directly place order. So this is how we are reducing your steps to complete action. We have exchange linking in chart. With one click, you can open chart for any script in NSE, BSE, future, ATM call and ATM put. We always want to create better products with our innovative team. You can place orders from charts, so join and look at all our trading channels. For account opening details, you can visit our website myespresso.com. Thank you, everyone.
Okay, can you please move on to the next slide?
I have
Next
covered this.
Yeah, stay there.
Ashok, I have covered this.
Okay, sounds good. Thank you. Can you move on to the next slide, Kapil? One more. Yeah. So friends, here is a quick update on status on the Amazon Fund of Trading Strategies organization, which is building algo strategies 100% automated for retail traders, which predominantly includes back-tested and validated models, zero manual intervention, plug-and-play system with overall strategy as a service. For more details, log into www.statuson.in and the relationship manager will reach out to you. Next slide, please. As a part of offering, here is a lovely gift for every one of you. Option Omega 2.0 event called Panini Positional Premium Strategy. It's a good strategy which made a lot of money last year. So go ahead, try to grab this particular course by searching Panini in the tradersgurukul.com website, and this course would be free for you for lifetime. It will be available in your dashboard. Okay. Next slide, Kapil. Sounds good. Now it is time for Q&A, right? Okay,
Right.
friends, please go ahead, shoot your question. The first question from Ashish Narula. Kapil, can you please take an example of a scenario when there are no reversal and market just kept moving in one direction to explain the story?
We can take that example also.
Yeah.
But for that, we have to move some other websites.
Okay.
Okay.
Which website?
So, Opstra.
Yeah, you
or
can go
something
and
else.
show it. Go ahead, go and show it.
Okay. So now we can take any example for any kind of directional movement. So this is Bank Nifty chart. Okay. So we should go for a week where we can see a directional movement whole week. So this could be the week. See. This is the expiry. This is the expiry day. This is expiry day 6th Jan. Here and it started from 30th December. So 30th December से ये मतलब week start हुआ था. So let's try to find out what happened in that week. Okay. So I took a trade around 320 on last expiry 30th December. So market was trading around 35,100. So I will sell 35,100. Straddle 35,100. Okay. And what is the combined premium I got? It is something around 400 and 400. It is something around 800. So what I have to do? I have to buy wings around 800 points on break even. So I bought 35,800 C and 34,200 P. I don't know that which side market will go. Sorry. $34,300. 800 point below and 800 point above. 35,900. So this was our position. Okay. So let's try to find out what we did and market become directional. See, on 31st, market was sideways. Whole day, it remains sideways. So let's try to find out whether we get some kind of chance for 20% rule or not. Market is trading around our break even point. Still we are not in major loss. See, market is continuously trading around our break even. So what we have to do, if market is continuously trading around at our break even, but I told you that if we have to give 40% in that kind of case, if market is trending and reach at your break even, then we have to shift our buy wing to break even. And what is our break even in here? 35,658, 35,600, around 35,600. Then what we will do? We will just switch this 35,900 to 35,600. It means we will switch 300 points. Because in case of panic, in case of directional panic, you just first you have to reduce this loss. Because if market is going up, then we have to reduce this loss first. So I bought this 35,600 and exit this 195. I paid around 125 rupees for 300, yani ki around 40%, 40 points. Okay. As I told you, whenever market reach at your break even, you have to pay 40 points from your pocket for every 100 point movement. So I moved 300 points. Okay. And I paid 125 points. How? Check here. 35,900 is trading around, was trading around 195 and it was trading around 320. So difference is 125 points for 300 point movement. Right now, what happened here? My loss is minimum on upside. Now, as I told you, your loss will never go above 100 point in that case if market become directional. And what you have to do, you just have to sell one extra option, even if you want. If you don't want, leave it and wait for any kind of reversal. Okay. What is my maximum loss on upside? 60 points.